Hello and welcome to the August edition of Pork Talk. Pig prices have been fairly stable so far this year, remaining above the average cost of production as estimated by AHDB. Today though, I'm going to talk about some risks to producer margins that may develop over the coming months. Early in the year, despite production trending well above year earlier levels, the decline in pig prices was tempered by a drop in import levels. As we moved into the second quarter, production levels moderated, reflecting the difficult winter experienced by some producers. The tighter supplies have brought some further support to prices. However, the impact of the winter challenges should phase out in the coming weeks, and as such, an uplift in supply is expected for the latter quarter of the year. We anticipate there has been at least some modest expansion in breeding pig numbers over the past year, which should also support numbers, alongside improving sow performance. Meanwhile, demand for pig meat in the UK so far this year has been stagnant at best. In recent months, exports have also suffered, largely on the back of falling Chinese import demand. The total volume of pig meat products exported fell 6% year-on-year across April and May, which translated into a 1% decline in value terms. Similar difficulties are being experienced on the European market. Although EU exports have held pretty firm in volume terms, value has fallen 9% for the year to May. At farm gate level, EU prices have not fared as well as UK prices, and so the gap between our pig prices and the average EU prices are now over 20 pence per kilogram. This is larger than usual. With this in mind, the UK may be facing increasing pressure from imported product. Looking forward, conditions on the EU market could remain challenging, with production expected to remain above 2017 levels. The value of exports may also remain depressed, reflecting competition from increasing global supplies. As such, there may be continued pressure on UK imports in the coming months, which, when coupled with higher domestic supplies and potentially lower demand, could mean downwards pressure on pig prices towards the end of the year. At the same time, feed prices have been rising this year. The recent dry weather in the UK and Europe has caused concerns for quality and yield for the upcoming harvest. If these are realised, further price support might be expected in the upcoming season. Declining UK wheat areas, coupled with quality concerns, could lead to a reduction in feed wheat availability. Producers may want to think about options to mitigate the risk of prices rising further. There may be advantages to securing a price and buying forward, but markets are already pricing in some risk, so if availability turns out better than expected, feed prices may fall later in the year. Another option might be to explore alternative ration mixes. The availability of straw could also be a concern for some producers, and where possible, it may also be worth considering alternative bedding materials. At the moment, it's too early to determine how much producer margins might be squeezed in the coming months. Indeed, there are some areas that could develop positively. For example, export opportunities may be boosted by the US trade war, which has disadvantaged US pork on both the Chinese and Mexican markets. AHDB recently reviewed the forecast for UK pig supplies and trade this year. For a more detailed discussion of our current forecasts, follow the link in the description below. Otherwise, for more up-to-date information on the outlook for pig prices and input costs, remember to check the Market News section of the AHDB Pork website, or subscribe to Pig Market Weekly by emailing the address below.